Hello and welcome to this Bitesize Technical video on the tapered annual allowance. The tapered annual allowance is a mechanism introduced by the government to gradually reduce the annual allowance for high income earners. It was implemented to limit the amount of tax relief individuals with significant earnings can claim on their pension contributions. So how does the tapered annual allowance work? It's based on two factors: adjusted income and threshold income. Adjusted income refers to an individual's total taxable income, including employment income, investment income, and pension income, plus any pension contributions paid in the relevant period. This means that a person would not be able to reduce their adjusted income simply by sacrificing salary or bonus payments in exchange for employer contributions. If adjusted income is more than £260,000, the taper will only take effect if the threshold income limit of £200,000 is also breached. The threshold income test is there to protect people who have spike in earnings from being unfairly impacted by the taper. Threshold income consists of income chargeable to income tax from all sources, so again includes investment income, not just salary, plus any salary sacrifice or flexible earnings set up on or after the 9th of July 2015, minus any personal contributions eligible for tax relief at relief at source. Personal contributions may therefore be used to reduce the threshold income figure to avoid triggering the taper. If an individual's threshold income is less than £200,000, then they will not usually be subject to the tapered annual allowance. For every £2 of adjusted income above £260,000, the annual allowance will be reduced by £1. The reduction is capped at £50,000, which means the minimum annual allowance individuals can have is £10,000. The full taper will apply to individuals with adjusted income over £360,000. Previously, different limits applied. Between the 6th of April 2016 and the 5th of April 2020, threshold income was £110,000 and adjusted income was £150,000, and the tapering could reduce your annual allowance to a minimum of £10,000. Between 6th of April 2020 and 5th of April 2023, threshold income was £200,000 and adjusted income was £240,000, and the tapering could reduce your annual allowance to a minimum of £4,000. So let's look at an example. Georgina has a salary of £220,000 and investment income of £10,000 in the tax year 23-24. Her employer makes a £50,000 contribution and she personally makes a contribution of £10,000. Her adjusted income is £280,000, £230,000 of income chargeable to income tax, plus the £60,000 pension contributions, minus the £10,000 personal contributions. Her threshold income is £220,000, £230,000 chargeable to income tax, minus the personal contribution of £10,000. As both her adjusted and threshold income are above the relevant limits, Georgina is subject to the taper. Her £20,000 excess above the adjusted income limit reduces her annual allowance by £10,000 to £50,000. As her total contributions are £60,000, she would be subject to an annual allowance charge on the £10,000 excess unless she had any carry forward available. The tapering of the annual allowance does not prevent an individual using carry forward. Tapered annual allowance can be carried forward in the same way as the standard annual allowance, and we'll cover this in a separate video.